Hello friends, we'll be discussing an illustration which is related to the comprehensive problem of company accounts, whereby you'll be figuring out the share forfeiture and rather the details of calls in arrears and calls in advance. So when we speak about calls in arrears and calls in advance, we understand that there are two features related to this specific part. Either you receive the money in advance, or either there is some money that is yet to be received even after the call due has been made. That means whenever the entry is passed for either due and received, and if before making a due entry you've already received that amount, that is calls in advance. If after making the entry for due yet to receive that amount, then that is known as call in arrears. Now this specific illustration will refer to such kind of problems, or rather such kind of thesis based on the problematic, or rather the description that we have already discussed in the previous videos. So let's go ahead with this illustration and figure out what exactly do we have to do in this kind of illustration. So the problem that we're discussing right now, based, or rather it is based on a company which is known as Glamour Limited, who has invited an application of 15,000 shares. So basically the issue has been done for 15,000 shares. The following details will be provided to you regarding the application money, regarding the allotment amount, regarding the first call and the final call, based on which you have to go ahead and figure out what exactly you need to do on the adjustments part of this. Now the issue price here has been mentioned as 11.50 for a face value of rupees 10. That means every share that valued at rupees 10 has been issued to the public at rupees 11.50. That means 1.50 is the security premium that is taken by the company here. Now the bifurcation of this 11.5 has been divided into three stages. That means first is application, second is allotment, and the third is the final call. For application, they are taking around 7.50 per share, and for allotment and final call it is 2 rupees each. That means whenever the amount is supposed to be called, on the basis of the application that you're making, you will be supposed to pay 7.50 per share, and afterwards whenever the allotment amount is called up, you have to pay rupees 2 per share, and same for the final call here. Now, when this application was made, or rather when this issue of 15,000 shares was given out to the public, the applications that were received amounted to 18,000 shares. Now, this is the clear case of oversubscription in this specific illustration. Now that we're talking about oversubscription, there is a case added to it which is known as pro rata basis. Now, under this pro rata, we have given certain details, or rather we have been given certain details as to how this 18,000 shares have been dealt with. So 800 shares were first of all rejected completely. That means whatever application amount we have received for 800 shares, they have been refunded back to the customers. Apart from those 800 shares, we have another 2,200 shares whereby we have allotted complete allotment. That means whoever has applied for 2,200 share is getting the complete value of 2,200, and the balance is supposed to be dealt with a pro rata basis. Now the ratio for pro rata will be mentioned down in the question. Now the question also states that excess amount that we have received in terms of the application, we have to adjust that against the allotment money. Apart from that, they have also mentioned another adjustment into the question, as in an applicant to whom 40 shares were allotted failed to pay the final call money. That means there is certain calls and arrears when that specific call was made. So accordingly, we have to pass the journal entries to figure out how much is the balance that we have been left with. So before we could start with the journal entries, let's start with the working note as to figure out how much is the balance amount which is considered for the pro rata basis. That means the page will be divided into two sections, that means applied and allotted. So the application will be for 18,000 and the allotted will be for 15,000. Let's figure out the working now. So if you can see in the working that we have done here, we have mentioned, or rather we have divided the page into two sections, applications and allotment, or rather allotted shares. Now the first category of shares refers to the rejected shares. So the last total that you can see, which we are highlighting in blue right now, that means 18,000 and 15,000. So for 18,000 shares, that is the application received, and out of those 18,000 we can maximum allot around 15,000 shares itself. So for the first 800 category shares, they were completely rejected. That means there is no refund, or rather there is no problem of refund that will arise here, as that amount is completely refunded the moment when allotment starts. After that, the next category comes for 2,200 shares, whereby applications for 2,200 shares were fully allotted. That means whoever has applied for 2,200 shares, they got their whole share value of 2,200. So out of 18,000, you can now subtract 800 and 2,200. The balance that will be left is 15,000 shares. And apart from the allotment shares, that is the maximum capping of 15,000, you can now subtract 2,200. That means you'll have a balance of 2,000, or rather 12,800 shares here. So if you have to figure out the ratio, you can simply say as people who have applied for 15,000 shares, they got a value of 12,800. So if we have to roughly say 2,200 shares were taken off from that thing, and 2,200 excess money regarding the application we have with us, and that can be adjusted against the allotment money. Not the 2,200 one that we're talking about in terms of the one that has been already allotted here, but the one in the third category, whereby we have 15,000 shares. Out of 15,000, we have only allotted 12,800. So the additional money that we have here is related to 2,200 shares. So as we have mentioned there in blue, that means excess of 2,200 shares that we have here will be utilized for when the due allotment amount comes into the picture. Now we'll be starting off with the journal entries. Again, the format will be really same and really boring when it comes to preparation of format of shares and forfeiture. However, there are different concepts that we're going to study in this specific video, which refers to calls in arrears and calls in advance. Basically, here we'll be understanding the calls in arrear category. Now, when we're talking about calls in arrear categories, we need to understand that whenever this specific calls in arrears comes into the picture, it is only reflected when the receipt entry is going to be passed. So you just have two categories of entries that you have to pass, that is due and receipt. So let's start with the journal entries related to the applications first. So the first entry that we'll be passing here is the receipt of application money. We have received application for 18,000 shares. So accordingly, we'll be passing the entry here. That means 18,000 multiplied by 7.5 rupees. So the first entry will refer as bank account debit to share application amount, or rather share application account. Amount will be 1,35,000, 18,000 multiplied by 7.5. Now the next entry that will be passing is the reverse entry of the first itself. That means the entry that we have passed right now, bank to share application. The reverse of this will be share application to bank for the refund of the transactions that we have done. That means 800 shares being completely rejected. We'll pass that entry now. Now, after this refund entry, the next entry that will be passing is transfer of the application money to the specific requirements of the specific capital account that we have. That means share capital account that will be created here will be moved here with the application money, only with the application money. And the excess money that we have will be credited to the share allotment account. So the entry that will be passed here will be as follows. So as you can see, we have mentioned the entry here, that is share application account debit 1,29,000. You would be wondering why it is mentioned as 1,29,000. The reason being 1,35,000 is the actual amount that we have received in terms of the application for 18,000 shares. Out of those 18,000, we have already refunded 800 shares here. That means the amount equivalent to 6,000 has been already refunded. So out of 1,35,000, if you subtract 6,000, the balance that is left is only the amount that can be adjusted, which is 1,29,000. Now, out of this 1,29,000, ideally we are supposed to receive only applications for 15,000 shares. So only that much of application money can be moved to share capital related to application. So if you see the entry that we have passed here, that is share application account debit 1,29,000 to share capital, which refers to only 15,000 shares multiplied by 7.50. Let's figure out how much is the amount there. So the amount that we figure out is 1,12,500. Now, whatever balance we have, that means 1,29,000, out of which 1,12,500 will be subtracted. Whatever balance is there is the amount of money that can be adjusted against the share allotment due amount. So here, the balance money that we have is 16,500 that can be adjusted. Now, the next entry will refer to allotment being due. That means here we need to figure out how much amount we're supposed to receive on allotment. Out of the entry that we're supposed to pass here, that means we're supposed to receive an amount of 2 rupees per share on allotment. If you see, there is an additional 1.50 as security premium on every share, because the face value of this share is rupees 10. However, the issue price is 11.50. That means additional 1.5 rupees is the premium. So if you're taking 2 rupees on allotment, that means 0.50 paise will be related to the capital of the allotment, and the balance 1.50 will be the premium that we are taking. So the bifurcation has to be according to that. Now share allotment will be debited with 30,000. The reason being, 15,000 shares being allotted multiplied by 2 rupees gives you a value of 30,000. Now this 30,000 will be further segregated as 0.5 variable and 1.50 variable. So if you can see the entry we have already passed, at a share allotment account debit to share capital to share, or rather security premium. 30,000 has been divided successfully into the categories of 7,500 as share capital and 22,500 as security premium. Now, the next entry will be receipt of allotment money. So ideally you're supposed to take 30,000, but you won't be taking 30,000 here because you already have 16,500 additional with you of these customers who have already paid up in application money. Now, whatever balance is there available with us, that will be adjusted first. That means 16,500 that we have figured out earlier, that will be first subtracted from 30,000, and whatever balance is left, that will be received by us. So the entry for receipt of allotment will be bank account debit to share allotment account. So the amount that has been already paid up, or rather the amount that is already received by us, that is 16,500, if that is subtracted from the amount due of 30,000, you're supposed to receive only 13,500, and that has been mentioned there. So here we close down the allotment. Now we go on to the last part of the illustration, which refers to the final call being due here. So the second last entry that will be passing here is the due amount on call. So the due amount on call is share final call account debit to share capital, which amounts to 15,000 shares and 2 rupees again on that same call. That means 30,000 is due. Now we have to figure out how much is the calls in arrears. Calls in arrears will be an expense for us, or rather it will be a loss for us. So hence it will be debited, and whatever balance is left after that much amount being subtracted from the due amount is the amount that we have received here. Now the last entry that will be passing here is bank account debit with the balancing figure, calls in arrears account debit with the amount we already know, because a person who was allotted 40 shares failed to pay the final call. That means 40 multiplied by 2, he failed to pay 80 rupees there. And after 30,000, or rather from 30,000, if you subtract this much of amount, you will get the amount that is supposed to be mentioned in the bank column. So the amount we have mentioned here is 29920. That is the amount we have received in our bank account. 80 rupees is something that we haven't received, as rather it is known as calls in arrears, and 30,000 is the amount that we're supposed to receive. That means this is the closure of this specific sum. So however, we have understood that calls in arrears is only a loss for us, and this is how we are supposed to calculate. However, this is just a basic version of this. You will be able to understand more, or rather in depth, of this specific concept when you further go ahead with more of complex problems related to this specific chapter. So right now, I hope this video has given you a clarity about the gist of what calls in arrears means. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.